Hi, it's me, Max Keiser. This is the Keiser Report. We're going to tell you things you never knew about Michael Bloomberg. But first, let's check in with Stacy Herbert. Stacy?
Max, you know, we've been talking about suicide bankers around the world, and they are out in full force this latest week. But at the start of the week, I want you to look at this image from outside of the Acropolis when it was taken over by the Communist Party Union in Athens. The peoples have the power. Never surrender. Organize. Counterattack.
It's the counterattack in Athens, joining the global insurrection against banker occupation. Over there in Cairo, they're well ahead of the curve, and they're rejecting all IMF World Bank loans, and all these protests are going to conjoin to become the global movement. And by the way, for you frickin' so-called communists in Athens, you're not fighting against capitalism, you're fighting against monarchs and oligarchs. Capitalism's got nothing to do with your problem. Learn something!
Exactly. Actually, the quote is, "We will strengthen our struggle with people from all over the world against capitalist brutality in order for the brutal measures that bankrupt the people not to be applied." So all of our headlines are going to prove that they are wrong about that. It is not capitalism, it's rigged markets, and that's the opposite of capitalism. First, take a look at this headline.
Yeah, I'm looking. Look at that.
Look.
Yeah.
This is in regards to the oil release shocks markets. Okay, this is the U.S. and IEA. Remember, last week they released 60 million barrels of oil onto the market. Move is warning shot to OPEC.
Huh?
They say.
Huh?
Exactly.
Huh? What?
What sort of warning shot is this? Japan to release 3-day oil stockpile in line with IEA call. So what kind of message is Japan sending to OPEC? You know, Japan imports 4 million barrels of oil per day, almost entirely from Saudi Arabia and the UAE.
Well, before we had those suicide bombers in Iraq, we had the kamikaze, didn't we? This is kamikaze thinking. Let's blow ourselves up. Let's blow up our only natural resource that we're 100% entirely dependent on to show OPEC a message. Oh, OPEC's hurting now. It's like a scene from the Fight Club.
Exactly, but it's even worse. It's like one of those suicide bombers that accidentally blows themselves up like 100 miles from the intended destination.
Yeah, they're fiddling around with their cell phone like, how do I get this bomb again? What's the number?
So nobody noticed their statement, of course. They only find little remnants of Japan all over the place in this case. So, I mean, I want to turn back to a headline from March 14th. This is a few days after the Fukushima disaster. Yeah. Oil settles higher. Japan may boost fuel imports. Because, of course, 11% of Japan's energy needs come from nuclear energy. Fukushima is knocked off the line, and they've had to turn to more oil imports. So they're more reliant on oil imports now than ever before. So the message that they're sending to OPEC is that, hi, we'll be back in a few days paying more for it than we sold it to you at.
Right, so the context here is, you know, the Fukushima disaster, which took energy production offline. They need more oil. So to help the people that are now in blackouts who can't find the on switch in their little hovels in Tokyo, their country is going to antagonize the only source of energy they have. And does that make any sense?
So here we've proven that they're selling oil. This is kind of like a Gordon Brown move. Remember, he announced to the market that he was going to sell half of Britain's gold supply. Of course, it guaranteed the lowest price possible. This is exactly what Japan and the U.S. and France and Germany are doing. They're announcing to the market, we're dumping all of this oil, give us the lowest price possible, especially since we're going to have to buy it back at a later date. Now, the other thing, of course, we knew that oil would fall 7%. Now check out this headline, Max. CFTC investigating IEA oil release leak. Oh, yes, Max. Surprise, surprise. U.S. commodity regulators are examining whether traders received early word of a decision to coordinate a release of global oil stockpiles ahead of Thursday's announcement by the IEA.
Oh, good. I get to talk about my Bloomberg reveal now. Now, of course, we know that they did get advanced knowledge. We've been talking about on this show the fact that those in Washington and Congress actually can trade on inside information. It's legal to do so. How they got that booked into the legal framework, I got to do a little bit more looking into. But inside information is completely legal. This is my Bloomberg reveal because the Bloomberg service, which is a terminal, you pay a lot of money to get prices, basically, and you get to look at markets. Now, there are different subscription rates at Bloomberg. You know, if you pay more, you get a look deeper into who's bidding and who's offering in the marketplace. And if you pay even more, you get spoon-fed to you inside information from Michael Bloomberg, who's there, the mayor of New York, who's, of course, overseeing the New York Fed, who, of course, is involved with Goldman and J.P. Morgan and the Federal Reserve Bank in Washington, dispensing inside information illegally. Bloomberg's involved in a legal conspiracy. That's not conspiracy theory, that's conspiracy fact. It's all tied into Bloomberg. Bloomberg being, of course, now running for president, supposedly lining things up. Where's he getting that money? Oh, I get it. It's inside information, which he will, of course, try to legalize to cover his butt.
At the end of the article, there's a quote, "It's going to be awfully tough to identify the source of the leak in this case," because, of course, it's always awfully difficult to prove insider trading. 28 nations were involved, so a whole lot of people knew this ahead of time.
Yeah, well, the CFTC and other regulators, they don't have the money to pay for the subscription on Bloomberg to show you who's trading on inside information. They're bankrupt, purposefully, on purpose, so that they can't possibly prosecute the insider traders.
But also, as Leah McGrath-Goodman proved earlier this week, is most things are no longer illegal anyway. They've been unwound. All the regulations against insider trading and trading on this sort of information is no longer illegal.
Right. CFTC, Gary Gensler, former Goldman Sachs guy, he gives his blessing to outright market manipulation and fraud. Again, to the people in Athens, you're not protesting against capitalism. You're protesting against transgressions against capitalism by market manipulators and insider traders like Gary Gensler at the CFTC, Michael Bloomberg at Bloomberg, or Jamie Dimon at J.P. Morgan. These are the new junta. The new junta. Remember the junta back in the 70s that totally screwed up your country? Well, the troika is the new junta.
Well, the other thing about this oil dump onto the markets is that Obama now gets to claim that he's tough on speculators, all those speculators driving up the cost of oil and gasoline. Well, of course, only speculators, only these top guys, these hedge funds, these oil traders make money on a downside, right? Contango, why the release of oil from the SPR is a doomed idea. By dumping 60 million barrels of oil on the market, or saying they're going to, announcing it ahead of time, the price of oil has fallen today, in the market today, not in the future. Now traders are able to buy this oil cheap from the U.S. government, from the Japanese government, from the South Korean government, France and Germany. They're able to buy it today at this $90 price for WTI, $110 price for Brent. They're able to buy that and sell it back to them for 6 months, 9 months down the road.
Right. Well, this idea that Obama was tough on speculators, being tough on speculators assumes or makes the assumption that somebody's losing money because they're being tough on their criminal behavior. They have a risk. There's some kind of penalty. But, in fact, that's incorrect. By simply telegraphing which direction oil is going from the Obama White House to the oil market, they were able to make huge, gargantuan profits once again, which will trickle back into the oil futures markets within 6 months' time as oil bursts past 100, blows past 150, on its way to 200. Because you're just giving ammunition to the very people you say you're being tough against. It's like, for example, you see a perfect example of this, the U.S. selling guns to the Mexican drug cartels and then saying, we don't know why we're losing the war on drugs, all this drug coming from Mexico. Well, stop selling them so many guns!
Now, speaking of market intervention, there was, at the end of April, remember we had all those margin hikes on silver?
Oh, yeah, who can forget?
Well, Bill Gross, the manager of the world's largest bond fund, tweeted last week that margin increases on silver were basically an attempt to rig the market. He said, quote, IEA action yesterday continues policymaker efforts to cap bad inflation, in parentheses, silver margins, etc. Nonetheless, higher inflation ahead.
Well, Bill Gross is going off the reservation. He's calling out the manipulators and the corrupt regulators. They're in the pocket of the markets. He feels, I believe, that his fund, biggest bond fund in the world, one of the biggest funds in the world, he's got the leverage. And he loves to write about the inner workings of these markets. Now, over there on BusinessInsider.com, Joe Wiesenthal, at the same time, he wrote a piece lauding Ben Bernanke for engineering a price drop in the price of oil. Of course, Wiesenthal's a paper bug, and he attacked PIMCO and Bill Gross as being given to conspiracy theories. So there's a bit of an interesting dynamic being set up here between Bill Gross and the people who support the status quo and the paper-pushing, paper-bug, neoliberal psychopaths that drive down the road toward economic juntaism that we're seeing in Athens, the return of the junta. They call themselves now the Troika.
So Joe Wiesenthal is calling him a silver conspiracy theorist. But here's a guy, Bill Gross, who accidentally admitted, I believe it was on CNBC, that he received inside information from the Fed. He receives information on interest rates.
That's right. He let slip. And I think that's part of his campaign to try to bring some balance to these markets. I think he's a vigilante for market justice. So he let slip that he actually is in the loop with inside information from the New York Fed and the Federal Reserve. Now he's talking about Gary Gensler, CFTC, openly and corruptedly rigging markets in this rigged market capitalist nightmare that's disenfranchising people all over Europe, all over America.
But the Fed did a great job because we had it on our YouTube. Look down below here. People were screaming, shrieking that the Fed won, silver prices are falling, they're so powerful, we are helpless people. Remember, but at the top of the show, we said people have the power. It's the people who have the power. Organize your counterattack and you will win. Silver coin sales booming at Perth Mint. So there were a lot of people shrieking, terrified of Ben Bernanke. They look at him and they see the Wizard of Oz before he's revealed. They see a powerful, all-knowing man, and they're afraid of him. Others were out buying silver while the prices were being smashed. Probably Bill Gross, but the Perth Mint, for example, says that they sold 10.7 million ounces of silver since July 1st of last year. That's a 66% increase over the previous year. And the U.S. Mint sold 3.65 million coins alone in May. That's a 30% increase.
Well, you mentioned the Wizard of Oz. Of course, the Wizard of Oz is an allegory about returning to the gold standard. And as Dorothy's ruby slippers were originally silver slippers. And if you play the Wizard of Oz on TV or video or DVD and turn the sound all the way down and simultaneously play the entire full-length version of Dark Side of the Moon by Pink Floyd as the musical background, you'll get frickin' ripped.
But again, all of these market manipulations, they help the people who are short, because remember, pension funds, your pensions, your future can only really go long in the market. So the government rigs the market on silver and on oil. They force it down because their guys are making money on the drops in prices. And most people don't understand that. They think prices have to go up on various commodities and stocks for people to make money, for speculators to make money.
Fear is more profitable than faith. That's the underlying functionality of current rigged market capitalism. And Michael Bloomberg, we've got you in our crosshairs. We know what you're doing. Stacey Herbert, thanks for being on the Keiser Report.
Thank you, Max.
Don't go away. Much more coming your way, so stay right there.
I was just thinking about my future. Before the foreign companies came, I dreamed of owning a can-cutting factory. But we have less garbage now. Some visitors who come here make fun of me. Pick it up, garbage boy. I'm not bad like people think. I'm a good person. It's just that people don't see me. But I feel that with time, people will like me. I feel people will start to appreciate us.
Hi, I'm Max Keiser. Welcome back to the Keiser Report. Time now to go to Acapulco. Talk with Jeff Berwick, editor of DollarVigilante.com. Welcome to the show, Jeff.
Thank you very much, Max.
All right, Jeff Berwick, as your website name suggests, you are a dollar vigilante. Now, the U.S. and the IEA have just fired a 60 million barrel wad at you of oil. Are you scared? Is selling oil from the Strategic Petroleum Reserve going to defeat inflation, Jeff?
It's pretty obvious that Obama understands the oil market about as much as he understands the U.S. Debt market. This will have absolutely no effect, and it's quite puzzling why they would even do it. There's obviously just one or two reasons why they would do it. One is for political gain, which really makes no sense because why would they even bother? Like, as I just mentioned, this is such a small amount that it really won't have very much effect at all. The only other reason that I could think of that he would even do this is there's some sort of an emergency, like that's the reason you're supposed to actually release these oil reserves. And who knows, maybe they're planning something to happen with Iran. There's any number of possible things that could happen at this point. This is a desperate government, and it's a dying empire that is in its death throes, and it's liable to do anything at this point.
Tell us, Jeff Berwick, describe to us what is a dollar vigilante, how'd you get into it, and what do you expect going forward? Just speak more top level.
Basically, back in the 1980s, as you know, there used to be bond vigilantes, people like Soros and those sort of people. And back then, the reason there was bond vigilantes was they basically thought there was no way to control these governments who were inflating or going too far into debt, and the only way that they could really control them was to sell their bonds. So back then, they were called bond vigilantes. Well, now we've got a completely different world where we live in a completely fiat currency world, and people like Ben Bernanke in the Federal Reserve are buying up all the bonds, and that's what they've been doing in QE. So there's really no way to fight the government now by selling bonds, and there's no point to it because they can print up as much money and buy all the bonds they want. So the only way for regular people to protect themselves and to show displeasure with what these governments are doing is to sell dollars and buy real assets such as gold, silver, even energy, oil, things like that. So that was the beginning of the dollar vigilante and how we started out.
All right, Jeff, so you mentioned the 80s, and this starting in the 1980s, and it's kind of mimicking what we used to call the bond vigilantes, who would sell bonds as a way to offer some checks and balances against government overspending. But then, thanks to programs like quantitative easing, where the government's coming in and buying government bonds, they've effectively co-opted the bond vigilantes. I remember back in 1987, after the crash on Wall Street, the Federal Reserve, the Treasury Department, and Ronald Reagan and Rubin and Greenspan came together. They formed a working group on finance, and they started to buy S&P futures contracts the next week. And this was the first time, or I should say, not the first time, but really the beginning of the government, the U.S. government, having its own huge hedge fund type account used to move markets in directions that they claim are beneficial. Of course, that goes completely against the idea of free market capitalism. It's the beginning of institutionalized rigged market capitalism. Is that part of the history of the past 20, 25 years that you are commenting upon? Is this part of the philosophy here, part of the idea?
Absolutely. There really is no way to protect yourselves nowadays from what these governments are doing. And as you said, they're completely out of control now. This is not a free market system at all. And what you were just referring to is the plunge protection team. And for some reason, well, I understand the reason. The reason that the U.S. government thinks they have to make sure things like the stock market don't go down very much is because they're basically controlled by Wall Street, and that's not what Wall Street wants. So the markets will only go down when they want it to go down. So this is complete rigged artificial financial system, and the only way to even get outside the system at all is to sell your financial Federal Reserve notes, U.S. dollars, sell bonds, and sell anything from the financial system and get out of the system. And that's the only way you can protect yourself at this point, because this system actually is going to collapse. No one knows what's going to happen at that point. So it's a very dangerous time, but it's also an exciting time, as we know, and as you know on your report every day. I'm sure you're never struggling to find information or any news that's of interest every day. It's overwhelming what's going on right now as the system is in a state of collapse. This is a complete end of the world as we know it in the financial system. And that's probably a good thing, because this financial system is not a free market system. It's basically a fascist or a controlled, and in some ways communist system, when you have the central planning of the interest rates and the dollar and the fiat currency system. This is just an atrocious system, and we're just seeing all the symptoms of this all around the world right now as the system starts to collapse.
Right. Rigged market capitalism is a growth industry, and certainly we're capitalizing on that here on the Keiser Report. But you mentioned the comparison to command and control economics, most recently associated perhaps with the Soviet era of fixing the price of products, let's say cars, and not allowing the market to determine the price of something like a car or manufactured goods. And this results in collapse. Now, the comparison here is that in the U.S., you have a Politburo called the Federal Open Market Committee run by Ben Bernanke, and they don't fix the price of products per se, but they fix the price of money. They fix the price of interest rates. And the result is the same. You've got a command and control economy that is causing, generating enormous price dislocations. As you see the price of commodities skyrocket, wages collapse, and the basic quality of life in the U.S. is deteriorating rapidly as we've seen anywhere in the last 50 years, correct?
Oh, totally. And it's just amazing that they do try to control the prices of everything, but at the same time, they're not very smart. Either that or they're acting like they're not very smart, because they use all these Keynesian economic theories, which makes no sense. And they don't seem to understand that once you inflate a bubble in one area, which is what they did with the housing bubble in the U.S. after the tech bubble, they never let any of these bubbles truly collapse anymore, which is a sort of a Keynesian sort of approach on things, that they can somehow smooth out these bubbles by inflating the money supply. But they don't seem to realize that whenever they reinflate the money supply in expectation that they'll reinflate the bubble in, for example, housing, they don't seem to realize that the money never goes to the areas where the bubble just collapsed. So they're trying to, they've been trying since 2008 to reinflate the housing market, and the money has not gone there. Now the money's gone towards commodities, towards gold, towards things like food. And we're seeing that all over the world right now as people start to riot and protest against the rising price of food. And this is all led by Ben Bernanke and central banks all around the world. It definitely appears like they're doing everything possible to make the system collapse.
Well, the easiest market to manipulate is the stock market, and that's what Ben Bernanke looks at. And with these new IPOs coming down the pipe from LinkedIn.com or Facebook.com or Groupon.com. This is creating a lot of new currency to pay off bribes and to, conduct this institutionalization of the American kleptocracy. But you mentioned Bill Gross, bond vigilante extraordinaire, what's left of them anyway. Now, he recently tweeted that this move that we were just talking about of releasing oil was similar to the CME increasing margin rates on silver. Now, this opens up a bit of a can of worms here, because the CME's increase in margin rates split the financial journalistic community down the middle between those who believe that the regulators are manipulating prices and manipulating things like margin rates, and those who believe that they're not. Bill Gross coming down on the side now of the manipulation camp. Now, the intention was to drive down prices, as Bill Gross says. Now, do these interventions in the oil and silver market, do they do anything to dissuade you from investing in either of these assets, let's say in oil or a silver? And what's your thoughts on what Bill Gross is saying?
It definitely doesn't dissuade me. If anything, it encourages me. I'm looking at buying oil right now because we've been given a little bit of a dip here by their little sale of their emergency stock. Definitely, I completely agree that the market is manipulated. There's absolutely no question of that. It's just a matter of to what level is it manipulated. But the U.S. government for decades has been manipulating markets. Just look what they did to the Hunt brothers. Basically, the Hunt brothers tried to buy up a lot of silver, and the U.S. government didn't like it, and they did everything they could to manipulate the market down to basically end up bankrupting the Hunt brothers and basically end up destroying their lives, basically. And of course, what did they call the Hunt brothers in the 1980s? They called them manipulators. Well, there was only one real manipulation during that. The Hunt brothers were just buying silver because they were seeing the same things we see today in the inflationary 1970s, and the U.S. government manipulated the price of silver lower and then accused the Hunt brothers of manipulation. So it's the same old thing. They've been doing this for decades, and it's actually just getting worse and worse now, and people are just starting to wake up to it.
Right, and the sale of silver rounds and silver coins has never been higher, as the public doesn't seem to be fooled by this. And we've got about 30 seconds. I just want your final thoughts, if you can, weigh in a little bit on the Bitcoin phenomenon that's sweeping the globe, that caused a lot of controversy, a lot of hate mail from some folks, but then again, we and others believe it's a fantastic thing. What do you think?
My first impression, I heard about 3 months ago for the first time, and I was thrilled when I heard about it, and I think that's a little bit of the computer nerd side of me. I see this as a little bit of a struggle between computer nerds and the Austrian economics people, and I'm very involved on the Austrian economics side as well, and I have a lot of friends, and I'm involved in a group, and actually I was very surprised, as you mentioned, a lot of sort of more libertarian Austrian economics, these sort of people have kind of lashed out against Bitcoin, and I'm a little bit confused about it as well. I think they're coming from it from Mises. He used to say that in the theory of money that money can't be something that can just be made up and conjured. It has to have value in and of itself. And so I think they're sticking to that, and they've been fighting the fiat currencies for so long that I think they're just used to fighting other forms of currency. But I really like the concept of Bitcoin, and I like how it's unregulated and untrackable, and there's no way to shut it down. And I think that the more that we have these sort of options, and these are options because right now we don't have any options in the fiat money system. We have to use the fiat money. But this is what free market money looks like, and I'm excited by it.
Yeah, I think what Hayek and Carl Menger and the Mises Institute, what they don't really had a chance to comment on yet is the key concept of cryptology and how that weighs into currency creation and exchange. But anyway, Jeff Berwick, that's all the time we have for this week. Thanks for being on the Keiser Report.
Well, it's been my pleasure. Thank you.
All righty, and that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacey Herbert. I want to thank my guest, Jeff Berwick, and if you want to send me an email, please do so at KeiserReport@rttv.ru. If you have a suggestion for a guest or you'd like to be a guest, send me an email, KeiserReport@rttv.ru. Until next time, this is Max Keiser saying bye, y'all.